It was a pretty nasty day for the stock market. Look at that sell-off at the end of the day with a 4.5 million volume 1 minute candle, the last minute of trading today. Whereas at the same time, AMC stock was up almost 14%. But you also have the bonds making some very big moves, and I want to go over this and the correlation between bonds and stocks. Bonds go up, stocks go down, and there is a specific reason for this. And there is something very weird that happened today, and what Sullivan said about NATO and Russia and some other things that we're going to get into here in this video as well. So in the meantime, hit the like button, subscribe to the channel. Questions, comments, concerns, source that down below in the comment section. Come join the trading community, link down below in the pinned comment for that one. But let's get straight into it. So like I said, AMC was up about 14% for the day. Now I'm seeing some very alarming things though going on, especially today. We pretty much tested $22 4 times today. We quickly went above $22 for 1 minute, came straight back down the next minute. So that is not a good sign. Lots of resistance around $22 per share. Now, am I saying this rally is over? No, I'm saying it's going to be pretty hard to get above $22 per share, more than likely. But when we do, we're going to skyrocket. You're going to jump up a couple dollars, in my personal opinion, if we can get above that $22 level. Whether it is tomorrow, whether it is a couple days from now, does not matter. But I do want to point out that AMC doesn't usually correlate the S&P 500, but it definitely did today. And you can obviously see this the last couple of minutes of trading, just a straight nosedive down in AMC stock, as well as for the S&P 500. Also, it's not a one-to-one correlation here, but you're definitely seeing that correlation. So the markets were weak. It did not help AMC's rally whatsoever. At the same time, you are seeing TLT. This is the 20-year treasury bond that is going through the roof today. This means that yields are actually dropping, so there is somewhat a rush to safety right now, because it's basically like a dividend stock. When people buy the stock, dividend stock, doesn't matter what the yield is, when they buy that stock and make the stock price go up, the yield is fixed. So you might get paid 20 cents per share, no matter if the share price is $50 or $250. Your yield is higher the lower the price is. So the higher TLT is going, essentially the lower the yield gets. And the only reason anybody opts to buy a bond or a dividend stock, really, when it comes down to it, is for the yield. So on a 10-year treasury bond, to see that up 2.19% on any given day and 0.35% here in after hours, you were seeing a real rush to safety. And this might be due to some of the comments that Sullivan did make today. He was essentially saying, to bottom line this, that it looks like Russia is preparing for an attack. Now, whether that is on NATO, whether that is a chemical weapons attack, that is the uncertain thing. And he said that, but he wouldn't really elaborate on what he was talking about. And from the intelligence that was put out on Russia and Ukraine, the White House was, I'm not trying to defend them here, but they were right. They were stressing imminent invasion. People were on their throats, right? About, why do you keep saying it's imminent? Nothing's happening. Well, look what happened. They invaded. So they're saying this through intelligence. They're finding this out, but they wouldn't clarify exactly what that is. You could be talking World War III here if they attack NATO, right? So that's obviously going to cause a lot of uncertainty. You also had Fed Bullard that came out today, and he is very much a hawk on the federal commissioners board. He said that they need to raise rates at a much faster pace, that this is inflation across the board, a wide-ranging different factors that are causing this, that they're needing to go more aggressively. He started to talk about the balance sheet as well, said that he would prefer runoff at first, but then they would have to sell assets. And that's the problem when it comes to the balance sheet, is nobody knows exactly what will happen when you start to reduce the balance sheet in a dramatic form. That has never been done. The balance sheet was $900 billion during 2008, the global financial crisis. Now it's at $9 trillion. It's pretty much 10 times bigger now. And what that is doing is that is providing stability. That is keeping rates low. That is keeping your treasury rates low. When you start to sell those, you're going to make rates go through the roof, and nobody really knows what to expect because, again, we have never done that. So a lot of uncertainties across the board, whether it is war related, the Fed related, inflation related, as well as this. Look at this. It says ship departures from Russian ports fall by a third. Grain, coal shipments down 72%. So you're getting more of a sense of this energy crisis is getting worse. That's why oil was through the roof today. I believe about 4%. Hold on, let me verify that, double checked. Yeah, almost 5% on oil, and then Brent crude up 5.21%. As well as that, if you're seeing wheat shipments not going out as much, come, summertime, you're going to see a real food crisis likely around the world. Prices going up even more for things that are already ridiculous. Let me tell you guys, I went to the grocery store 2 days ago. Prices are insane. No good. No bueno out there. So all of this leading to a lot of uncertainty, and it doesn't look like it's going away anytime soon. So that's what really happened to the markets today. Let's see if they're still falling here in after hours. Nope, up just a little bit, but it was nasty across the board. And this bond move really should make you guys wonder, because if we pull this out, this was the COVID crisis. So this was like the crash of 2020. This was March of 2020, and that's when shit hit the fan. And you got to pay attention to when the bonds start to go up, because usually the people that have a lot of money, they know when something is not right. So when you're hearing Sullivan talk about an attack possibly on NATO, when you're seeing all of these crises coming on around the world, it's something to take note of when the bonds start to react. Something that does not move around all too much. To see that move 2% in a day, it's not good. As well as that, like I said in the previous video, the UK actually just went into a technical recession today. First time since the 90s, I believe. So it's not a good situation. Their inflation about 6%. So a lot of people are also finding a lot of uncertainty out of that. If UK is going into recession, what's to say we will not, especially with the Fed tightening or about to tighten as much as they already have. So it's a very uncertain market that we are currently in. And that's what is really causing this sell-off today. AMC stock starting to get a little bit of a popper here in after hours, but it's just hugely affected by the uncertainties in the markets nonetheless. Let's get into some of the data that you guys need to know. First off, start with the data that is coming out for tomorrow. And we do have durable goods orders month over month, like I went over earlier. That comes out about 7:30 a.m. That might move the markets. It might not. It always depends. And then you do have a lot of Fed speakers as well as ECB speakers. And you also do have initial jobless claims. But you do have Fed Evans and Fed Bostic as well. They tend to be more on the dovish side, but last time they spoke, they were pretty hawkish, so they're probably going to hammer home that expectation for a 0.5% rate hike, and I will definitely pay attention to that. As far as the probability for a 50 basis point rate hike in May, that odds now sits at about 63.9%. 36.1% expect a 0.25% rate hike, so odds are we'll get that 0.5% rate hike, and this is just helping to, restrict liquidity even more. It makes margin levels go up. It really puts AMC and the MOAS trade in a really good situation the longer this does go. Believe it or not, the more liquidity that is basically sucked out the system and the longer it takes for the MOAS. So you should actually welcome that if it does take a little bit longer. Now, if you guys are just unaware, I do want to call this out for you guys as well. The margin debt is still through the roof. It actually went up from January to February about $6 billion. So the retail has been already squeezed out of their margin. It's a lot of institutional investors that have all of that margin. As far as, let's go ahead and pull this up. AMC, the max paying, I believe, $15.50, $16.50 per share by Friday. So it looks like we're going to be well above that. If we're not, you're looking at a pretty decent move down, and I don't think that is going to happen. We did close above $20 per share, so that was really good, and we're still holding 20 here in after hours as well. If we look at the Ortex data, See the option flow sentiment. This is really incredible. 86 orders totaling $59.96 million. Positive order value of 90%. These are positive order values that we have not seen in a very long time. 90% positive with this many orders. 86 institutional orders. These are not your small guys here. These are not your small fishes. These are your whales, right? These are guys with millions, hundreds of millions, billions of dollars that are buying AMC bullish option positions. Like I said, $60 million. That's a lot. In the past week, we've had 231 orders totaling $100.59 million. Positive order value of 72%. So we had a vast majority, about 60% of all of the week's option volume for today alone. So pretty big, and I think that does imply some more moves to the upsides that is to come. As far as the short interest, that's at 21.07%. Current shares that are sold short of 108.59 million. Cost to borrow max of 4.33%. Utilization of 100%. And the days to cover at 2.99. So not too much has actually changed here, but I do want to highlight cost to borrow max is going up a little bit. Utilization still staying at 100%. As well as that, you are really not seeing shorts covering at all. Borrowed shares for the day at 2.2 million. Return shares at 1.88 million. I know there's the T+2 delay on the return shares, so we'll see what happens here in the next 2 trading days or so to see how many shares were actually reported to be covered. But there's a lot of borrowing activity going on, which does suggest to me that's probably why we've been getting pinned and really seeing a lot of resistance around $22 per share. And it is quite phenomenal, actually. You hit $21.80 per share right there, $22 flat right there, $22 flat right here as well. Well, then $22 flat, $22.35. We did break above and hit that, $22.35, and then we came straight back down 1 minute later. So a lot of shorting activity that is happening right here to keep us under $22. I think it also goes to show how crazy this thing could get once you get into those mid 20s. And obviously hedge funds, they want to keep the stock away from those prices. You can see we were just so much resistance around this price. Look, just 1, 2, 3, 4, 5 minutes we were trying to break above that, kept getting rejected, fall back down, would go back there, rejected over and over again, and then finally broke through, finally pushed back down as well. So it's getting pretty interesting out there. Goes to show we do have a lot of pull here when it does come down to AMC stock. So let's pull up the daily candlestick chart now, and you guys can see this rally is phenomenal. But even if you look and scroll back, the volume here is still very low relative to what we have seen in the past. Like, take a look right here. August 24th, the stock moved up 20.34% on 225 million shares that traded hands. For the day, we've seen 168 million, which is decent, but the volume could still go much higher, and we could see a much bigger rally. And really, that's what I expected, to really go to about $21 per share and then see a little bit of resistance. If we could break out above 21 in a substantial way, then we would head to about $25 per share, the 100-day moving average. After that, the 200-day moving average at $33.63 per share. Watch to see if that volume comes in higher tomorrow, or if we do see lower volume, but you also see another substantial green day. If the volume dies down and we're still seeing a 5 to 10% green day move for AMC stock tomorrow, that's also going to be a very good sign. The RSI is approaching that overbought level at 65.52. Overbought is technically at 70 and above, so we're not quite there yet, but we are getting close. The MACD is very bullish as well. This gap is widening to levels that we have not seen really back here since we did hit about $15 per share and ran up to $21 last time. You're getting to that level, but we definitely have more bullishness to go, in my personal opinion. Now, if we do go ahead and pull up the Bollinger Bands as well, you are still above the top end Bollinger Band, and that's 2 standard deviations away from the 20-day simple moving average, which does still sit at $16.54 per share. So if you're thinking of any downside here, it's probably going to be down to that 1850 level. That's where we were today. But, you know, the higher we go, the more, I guess, safety, if you want to call it, to the downside that we are going to see. I don't think you're going to go straight up and then straight back down. The question is, do the shorts cover? Are they forced to cover? Will we see the MOS? Those are questions I cannot fully answer right now, but it looks like a lot of this rally has not been shorts covering. It's really been a lot of FOMO that has made its way back into the stock. Like I've told you guys for a long time now, people that trade in AMC or people that have been in the markets since 2020, 2021, they know AMC, they know the potential here, and they're going to jump in at the first sign of a potential short squeeze or a MOS-like event. So that is going to be all for this video. Not too much else to actually add. Like I said, we do have those Fed speakers tomorrow, so be on the lookout for that. Any headlines that come out, as well as Russia, Ukraine, what this meeting with Biden and NATO is really about, what could come out of that is highly unknown, and the markets are going to react very violently to good or bad headlines. So that's pretty much it. Thank you guys for watching. Come join us on the live stream in between 10 p.m. and 11 p.m. Every single day. That is Sunday through Thursday. So thank you guys for tuning in, and I will see you in the next one.